So, you've heard of Warren Buffett, right? The Oracle of Omaha. He built a massive fortune on a pretty simple idea: buy great companies with great management at a fair price. But here's the thing. Can that classic, old-school wisdom really work for a cutting-edge tech giant like AMD? You know, a company that's right at the heart of the AI revolution? Well, we're about to put that to the test.
It really makes you wonder, doesn't it? Can you actually use these time-tested, old-school rules to figure out what a new school tech company is worth? That's exactly what we're going to do. We're putting AMD through a full-on Buffett-style stress test to see if a company built on insane innovation and fierce competition can possibly measure up to a framework that loves stability and predictability.
And our roadmap for this is straight from the Buffett playbook. It's 3 core steps. First, we're going to analyze the business itself, what it does and what its competitive edge is. Second, we'll take a hard look at the management. And third, we're going to scrutinize the financials. It's a pretty straightforward path to understanding what is, let's be honest, a very complex company.
Okay, let's dive right into step 1, the business. For an investor like Buffett, the single most important thing about a business is what he calls its economic moat. Think of it like a castle, right? The moat is what protects that castle from being attacked. For a company, this isn't water and alligators. It's things like a super powerful brand, a key patent, or some kind of cost advantage that keeps all the competitors away and, most importantly, protects those long-term profits.
And believe me, AMD absolutely needs a strong moat because its castle is constantly under siege. I mean, in the world of computer processors, CPUs, it's in this epic head-to-head battle with Intel. And then in the absolutely explosive market for graphics cards and AI chips, it's going up against the juggernaut NVIDIA. This is not a quiet neighborhood, folks.
So how does AMD defend itself? Well, its moat, while a lot of analysts call it narrow, is very, very real. It's built on a foundation of crucial intellectual property and a really clever fabless model. That just means AMD designs the chips, but it partners with giants like TSMC to do the super expensive manufacturing. You can also add in its growing dominance in the really profitable data center market, and of course, the fact that its chips power the world's most popular game consoles.
And the result of that moat? Well, you can see it right here, about 52%. That's AMD's recent gross margin. Basically, the profit it makes on every single dollar of sales before you take out other expenses. Now, for a hardware company, anything over 50% is fantastic. It's proof that AMD has real pricing power, especially for its high-end data center chips. That's a huge checkmark in the Buffett column.
All right, now for our second test, management. Buffett is famous for only investing in companies with rational, honest leaders he can trust. And this quote right here, it just says it all. It captures the laser focus of AMD's team, which is led by the brilliant Dr. Lisa Su. Look, they're not trying to be everything to everyone. Their strategy is crystal clear, it's specific, and they have executed it almost flawlessly, pulling the company back from the brink to become a true market leader.
If you want a perfect example of this sharp leadership, you just have to look at the massive acquisition of Xilinx. This wasn't some random purchase. No, this was a deeply strategic move into new, high-growth areas like adaptive computing. These are specialized chips that you can actually reprogram after they're manufactured. This is exactly the kind of rational, long-term thinking that Buffett absolutely loves to see.
All right, time for our final test, the financials. Let's look at the hard numbers and see if the story we've been telling really holds up.
So the first thing your eye is drawn to here is that top line. We already talked about gross margin, and you can see that strong improving trend right here, recently hitting that really impressive 52% mark. That is a consistent sign of a healthy business. And here's another major green flag that would make Buffett smile. The company carries almost no debt. A debt-to-equity ratio this low is just incredible. It means AMD is funding its growth from its own operations, not by borrowing tons of money. That is financial discipline, plain and simple.
But here's where things get a little tricky. This chart shows free cash flow, so the actual cash the business is generating. And as you can see, it's been all over the place. Buffett loves consistent, predictable cash flow, and AMD's has been pretty volatile, partly because of the recent downturn in the PC market. This is our first real point of concern. And that brings us to maybe the most confusing number on the whole table, return on equity, or ROE. I mean, after this massive peak back in 2021, it just plummeted. For a value investor, that kind of wild swing is a major red flag. So what on earth is going on here?
Okay, so here's the secret. The numbers are being distorted by that huge Xilinx deal we talked about.
Because it was an all-stock deal, it massively inflated the equity part of the ROE equation. So, in simple terms, an accounting rule is making the company's recent performance look way weaker than it actually is. You really have to look past the headline number on this one.
So, after running AMD through the whole Buffett gauntlet, what's the verdict? Let's bring it all together for the final scorecard.
Okay, for the business, it's a check. AMD has a narrow moat, for sure, but it's clearly getting stronger. For management, it's another big check. The leadership is focused, they're rational, they get it. But the financials, well, that's a mixed bag. The strong margins and low debt are fantastic, but that volatile cash flow and the wonky ROE numbers definitely raise a yellow flag.
And all this leaves us with a really fascinating question, doesn't it? Does a complex company like AMD prove that Buffett's timeless rules are actually more relevant than ever, that they force us to dig deeper than just the surface numbers? Or is the AI revolution so profoundly different that trying to value its leaders with old-school metrics is like trying to catch a rocket with a butterfly net?